Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day. Trading today, market is down slightly, about 0.5% there. Pretty much all across the board, I think. We're down around about 0.5, 0.4%. I do think some of those lagging indices like the banks and the small caps did get hit a little bit harder today, maybe 1% or something like that, but pretty much kind of slightly down, grindy day throughout the day. Let's try to figure out what we can expect going into tomorrow and possibly remainder of this week here. So it looks like, so this was a 6, 5, 4, 3, 2, 1. So this was today at open, right? So it looks like this is where it closed yesterday, right on my long-term moving average here, right? And then we talked about how it was sandwiched between my midterm and long-term. So we opened flat at open here. Actually here, we actually gapped down. We actually gapped down here very, very slightly. There are some fluctuations, right? It actually kind of got up to the highs, the micro term highs there on the first hour. Second hour, we did see some downside move. Third hour, we continued to lower and then eat away a little bit of this gap area, just a little bit, not much though, not the entire thing of it. And yesterday we talked about it, how buyers really want to keep this gap open, at least a little bit, at least half of it, at least 50% of this gap, right? Buyers want to make sure this gap doesn't get filled, entirety of it. So buyers did pretty good job today making sure bears don't come down any lower. We still have this gap remains open here this much, and that's a good sign for now. So it looks like you know, that's a fourth hour, like middle of the day. Looks like we saw a little bit of bounce in that vicinity at 331. We made a little bit of move on the fifth hour. My midterm moving average acting as a micro-term resistance there. So it looks like that midterm moving average is acting as a micro-term support and then micro-term resistance there for now. But we got all these moving averages colliding in that vicinity. You can see that long-term moving average is here. We got the midterm moving average there. We got the short-term moving average there. So it's all hanging out in that vicinity. So a lot of times when you see the moving averages cluster like that, a lot of times that's a make or break level. Either this thing is gonna fall lower, we break, or this is a level we see some of these moving average kind of catch up with some of those older moving averages there and break out to the upside. So we're kind of in that pivotal moment, at least for the buyers. They would really like to see making some move here, continuing with that potential higher high in the short term, and then making a move to the upside here and then filling this gap, right? So this down gap still has a lot of weight to it. This gap still remains open. It's been open for about two weeks now. The longer this gap opens, the worse it's gonna be for the buyers, right? So they want to fill this gap as quickly as possible. That's where all the selling pressure came down about, and we even made a lower low here. So we're kind of in that, you know, make or break level, and buyers want to make sure go up and fill this gap. What the bears want to do, obviously, bears want to fill this gap. Right, that's the only up gap bulls are working with. Fill this gap, kill that buyer momentum, and then use this midterm moving average, right, to bring it down. And that's what bears want to see, right? Bulls obviously want to use that moving average to prop itself up, surf it up, and fill the gap and continue make a move. So we're kind of right in that in-between level, right? Things can get very good for the buyers, or things can get very bad for the buyers, where it's kind of right in that level. And we'll get a good clue how this market behaved going into this remainder of this week, depending on how the price is going to react with these these two gaps. I kid you not. If this gap gets filled, that's going to be bullish. If this gap gets filled, it's gonna be more bearish. Let's check out that oscillator here. So oscillator is pulling back, but we're not quite seeing a drawdown though, right? We're quite not seeing that. Like you can see, you know, we see the oscillator falling over, price falling over with it. We saw that price falling, the price falling over and oscillator falling over with that. We see oscillator falling over, but the price is being adamant right now, trying to correct through time versus correcting through price. What I mean by that, so when I say correcting through price, that's correcting through price. Oscillator gets to the top, bulls get higher, oscillator resets, price resets, price also corrects, right? There's deduction in price while the oscillator, you know, comes back down, right? And that was that oversold bounce because bears got tired, right? So now what we're seeing is price is actually moving sideways while the oscillator is curling down. That's something that I talked about yesterday, what bulls want to look forward to. Bulls want to make sure this gap remains open, protect that gap, make sure you price stay above at least 330.80 or so. Make sure you don't go down any lower than that, and you gotta hang on. Bulls gotta hang on, holding on tightly, make sure you don't lose it, and just gotta wait until you get your energy back. Wait till the oscillator falls back, hit this support, but keep moving sideways or maybe even slightly higher, right? And then once the oscillator gets to that support level, thrust, break above, or, you know, fill this gap, maybe even gap it up. That would be the best case scenario. And then in that, we see that this thing going right back up here. And with that momentum, you could see price advancing and my midterm moving average rising higher, right? The opposite scenario for the bears will be if we do see this thing come down and fill this gap. And the gap gets filled and the oscillator comes down, hit this level. So there will be another chance for the buyers possibly bring it up. But it will be a whole lot better if that gap doesn't get filled with that momentum. They want to keep that momentum going because we start still in this lower high, lower lower situation in the midterm. You see what I mean? You'd be surprised if the bears start coming down pretty hard. This thing will blow right through it. Right through this level. And we'll start to get back into these lows. And things gonna get very, very ugly fast for the bulls, right? Remember, this gap up is what did this right here, right? We talked about this level. There was a resistance prior to the gap up, right? This is exactly where it closed. Remember, see right there, prior to the gap up, it is no coincidence where my oscillator hit that here, right on that resistance. What happened next day? We gapped up and we pushed right through. You see that? And then price gone up. So when this thing comes down and this thing brings back to this level, that support level, if bears gap it down, you lose it and things could get ugly. We might even make lower lows. So we're right on the juncture where things could be good for the buyers or things could be bad for the buyers. We're right on that juncture. Like I've been saying this entire week, this gap must be sustained if the buyers want to continue to make a move to the upside. If not, you will see bears taking advantage. I'm still going to label this bearish, neutral to bearish in the midterm, neutral to bearish in the midterm because we got these lower highs and lower lows, but I'm giving it bullish in the short term only because this gap remains open as of today. So now we're bullish in the long term. We're bullish in the long term, short term bullish, bearish to neutral, neutral bearish or something like that in the midterm. If the price comes on and fill this gap, it'll be kind of more bearish in the midterm, and you're gonna start getting into the neutral to bearish zone in the short term. Things can change quickly. So as of today, I want to give it short term bullish, midterm neutral to bearish, obviously long-term bullish, and you guys know why I'm long-term bullish, right? I'm still looking at this, you know, when I say long-term, I mean going, you know, all the way back to the March lows. And longer term, looking at several months, 4, 5, 6, 7 months, we're still in a bullish territory. And just right now, we're battling in the shorter term and short to midterm, right? I'll come back for you guys tomorrow night. We'll go from there. Enjoy your evening. Good luck trading tomorrow.